Welcome to the Daily Update, where I'll go over the action in the market for Monday, February 27th, and then we'll see how things look for Tuesday, February 28th. Just to let you know, I'm back to using the microphone that I had been using to record these videos. I had a bit of a back issue for about a week, and I had to use a headset. So those of you that have been watching these for some time, you noticed that I sounded a lot different. Let's hope that this is a better sound and that I can keep doing it this way, barring any back problems. As far as what happened on Monday, we had a bit of a bounce. We came down to the 200-day moving average on Friday. We were able to stay above that, and then we bounced up above that and actually regained the 50-period moving average. We haven't switched things back to positive. Really, what we're looking at right now is just a bounce in an oversold condition. If we continue to go up from here, then we'll start to reevaluate things and see if things are shifting back over to looking more positive. But right now, they're still looking quite negative overall. So let's go back and talk about what happened. Right at the open, we had a gap higher. The futures were pretty positive during the night, so it wasn't a real surprise when we had that higher open. We were able to get above R1 at 39.85 and R2 at 39.99. You could say about the 4,000 level, with prices hitting a high of 4,018 before retreating back below R2 and then finding support at R1. It's always interesting to me how these R levels and S levels are so important. And the interesting thing also is that these lines are put on the chart before the day even happens. So we have this built-in set of information that's available to us. And a lot of the programming trading, the computers that trade instead of people, they use these things heavily, especially on a 10-minute bar chart. That's why I post the intraday pivot levels and the monthly pivot levels on the YouTube channel. And if you click on the community tab, you'll see where I post those each day. As the day went on, we rebounded with prices, but R2 then acted as resistance before prices then fell back down below 4,000. We ended up closing near the intraday low. So even though it was an up day, it wasn't all that positive as far as price action. And when we get in and look at the chart, I'll show you that. We were up 0.31%. Volume is still below average. Even on up or down days, we're seeing a real tapering off of volume. Our technicals are still negative overall, even though we're bouncing from an oversold condition because of this inflation and interest rate scenario, which is then also feeding over into the earnings per share, as well as valuation concerns within the market. There's the whole list of geopolitical concerns, specifically Russia-Ukraine. And then earnings are coming out even though we're getting near the end of earnings season. Here's the intraday chart where we gapped higher above R1. We actually were able to get above R2. We came up here and set the high at about 4,018. We then started to retreat back down through R2, came down to R1. This set up a support level. Tried to bounce back off of that, but then we hit resistance at R2, fell back down, didn't go negative at all. That's the dashed line here, but we did give back a lot of the gains. And so if you look at this, where we opened over here and we closed down here, even though it was an up day, that's not real positive price action, just something to be aware of. What are some comments that we can make? The S&P is still above its 200-day moving average, and we regained the 50-period moving average in Monday's session. On a short-term basis, our stochastic, Stoch RSI, and Williams percent remain extreme negative, and I'll show you those charts. On an intermediate-term basis, the PMO study is still kind of extreme negative, as well as the CCI 20. Notice that the CCI 14 fell off of this list. The dollar was down, and interest rates were also down, and that gave some support to stocks. We still have all of our yield curves that remain inverted. What we're really watching this for is these yield curves have been inverted for quite a while now. When they go back to stop being inverted, we'll look at, okay, what is the economic condition at that point? Because a lot of research has suggested it's not when the yield curve goes inverted that a recession happens. It's after it goes back to being non-inverted. That's when we kick into a recession. Sentiment is still positive. We ticked up a little bit. We had been at 57. After Monday session, we climbed back up to 61. I'll look over the economic reports on the next slide. And our trend, it's actually enough to make the green line cross back above the red line. So we're back to positive, but it's just barely positive. And I'll show you that chart. The ADX continues to decline, so it's a weakening trend. And we're still below 20. That also suggests that it's not a trend after all, since we're chopping more or less sideways. Our bias, I'm still keeping it mixed, and that mainly is not because of the up day, it's because of the price action intraday. Didn't look all that positive. You can't see it on this slide here, but our momentum is also mixed. As far as the economic reports that came out, we had durable goods, which came in down 4.5% on a month-over-month basis. They expected it to come in down 3.9%. The last time we had the report, it was up 5.1%. If you take out transportation, we were up 0.7% month over month. They expected it to be up 0.1%. Last time we were down 0.4%. Pending home sales were up 8.1%, much greater than the expected 1% increase, and last time we were up 1.1%. Here's the Ulcer Index showing how fear is still continuing to go back up. We're above the moving average and it is increasing. We use this more in conjunction with the VIX. When this is going up, that means there's more fear. The VIX is often going up at the same time, although it's not happening right now. The VIX was down on an up day. So we kind of look at these together to get a feel for what's happening as far as sentiment. Here is the VIX where we did decline with the up day on a closing basis, and the bar actually declined as well, but we're still above these moving averages on the bottom. That's just showing a little bit of pickup in fear, even though it was worn off slightly in Monday's session. The VIX of the VIX is also coming down, showing that there's a decrease in volatility of the VIX. Here's our ADX, where the green line is just barely above the red line again, so the buying power's on top, the selling pressure's on bottom, but our ADX is below 20 and declining and also below the moving average. It's really going back and forth right now as to what kind of a trend we are in, whether it's positive or negative, but on a bigger scale, we're not in a trend at all because we have a declining ADX. The daily chart shows how we stayed above the 200-day moving average on Friday, and then we were able to recapture the 50-period moving average. We're back right up to this upward sloping trend line right here. Is this just working off the short-term oversold condition, or are we going to see some kind of a bounce up out of this? That's what we're waiting to see. And then on the bottom, we see where volume really dropped off. Here's the stochastics where our short term is still extreme negative, as is the intermediate short term, and longer term we are still declining. The Stoch RSI is extreme negative, as is the Williams percent R. The Chaikin oscillator, which actually ticked up a little bit after Friday's session on a down day, well, it ticked down in Monday's session after an up day. So it's kind of going the opposite way of market action. So it's picking up some little differences than what we may be seeing just in the daily charts. So this is turning back to more negative, but we're still above this zero line. So it's positive overall, but currently declining. The CCI based on 20 periods is still extreme negative. Here's the PMO study, where the PMOs that are rising is still extreme negative, as are the number of buy signals, and that continues to decline. And the PMOs that are above zero also continues to decline. The Swellen Trading Oscillator based on price and volume, we're trying to curl back up here based on price, and we actually turned up a little bit based on volume. The BPI was able to get just a little bit back above 50. It's still declining overall. That's why I put this little moving average on here. So we haven't broken the downtrend yet, but we did see just a tiny bit of a bounce. And here's a look at a broader index with the NYSE BPI, where we were able to break out and then we've been coming back down. So this is turning more negative and didn't really improve all that much in Monday's session. The Chaikin money flow is declining, although it's still positive. And the balance of power continues to be negative, even though we're going sideways here. We're below the dashed line. The TTM squeeze continues to be negative as the red bars accumulate. And we're still neutral to negative with the go, no-go system with the brown bars. Our short-term fib levels, if we try to go back higher, we're looking at possible resistance at the 4007 level. And this line's been here for quite a while. We're below that currently. Longer term, and I moved this over a little bit to make it easier to read, we have overhead resistance or support, depending on where we're at about the 39.99 level. So again, you could say about the 4,000 level, and we're just below that currently. If we get set to go higher, will that act as resistance, or will we be able to break through that? Longer term, not anything new has been printed here. If we do continue to go up, we have more resistance at the 4,020 level, and then there's support way down at the 38.26 level, and that would be quite a fall from where we're at now. The moving average study shows that we're getting back above the 50-period moving average. The 100-period moving averages were also providing support. So this is still holding up so far. What we're waiting to see is, can the market build off of those gains, or are we just working off this oversold condition before we get set to go lower, or will we end up chopping more sideways? The elder impulse system for the S&P is back to neutral. And looking at the McClellan oscillator, we're still extreme negative, even though we did see a bit of a tick up. And the wider measurement still shows that we never did get extreme negative with the NYSE McClellan oscillator, and it's showing a little bit of improvement, but it's still negative since it's below zero. The summation index based on price and volume continued to decline. If we drop below zero with volume and then eventually price, that would be much more negative, but we haven't done that yet. New highs, new lows, really nothing happening right there. So our 5-period is rolling over and our 10-period continues to decline. The advanced decline line still above an advancing moving average based on price and volume, and a little bit of an uptick with Monday's bounce. We're still below zero with the advanced decline ratio. Accumulation distribution, which was actually more positive after Friday's session, ticked down slightly. It kind of picked up that intraday weakness that we saw, but overall this remains positive as we're above an advancing moving average. Volume continues to drop off as the histogram continues to decline and we're below zero. We're still negative with the diamonds, and the Nasdaq 100 also was able to bounce up off of its 200-day moving average, enough to get back to a neutral reading with the elder impulse system. The small caps continue to hold up. This could be giving some support to the S&P 500. We're in an overall uptrend and actually ticked up in Monday's session with the ratio. Just some updates with our scenarios. It looks like we're trying to take out this 2-year spike. So this previous spike that we had been working off of may be negated. And so we'll start watching to see what happens as far as the 2-year yield rising. And our staples to S&P 500 ratio is still positive overall. It ticked down just a little bit. We're still far away from this spike, but we didn't see an awful lot of follow-through based on price. What's our outlook for Tuesday? The technicals are negative and possibly working off this short-term oversold condition. That's how we have to treat this right now. Unless we see some good, solid volume with upward movement and lots of buying, this looks like more of a dead cat bounce before we're getting set to go sideways, if not even lower. We're just not seeing a lot of proof yet. That could always change with a good, solid, positive day. We have the advanced goods trade deficit coming out, as well as the advanced retail sales and advanced wholesale inventories. Not real big movers, but should give us some insight as to what's happening economically. The FHFA housing price index will be coming out, and the S&P Case-Shiller home price index will come out. Chicago PMI, that can be influential. And we have consumer confidence, which also can be influential. The whole list of geopolitical events, with the markets still being fixated on this inflation and interest rate scenario. We had a speech on Monday, but it really didn't make any news at all. We just want to be aware of when these things are happening. The next speech will be on Thursday, and then we have another speech coming up on Friday. As far as our Stock Traders Almanac, we're getting near the end of the month for February. I have a couple of different charts to show you. February 28th is pretty negative overall. It's only been up 28.6% of the time with the Dow, S&P, and NASDAQ. The latter half of February has tended to be rather weak, and I'll be updating some of this as we switch over into the new month. Here's a chart to be aware of. This looks at February, and it takes the trading days. This is not the date. Even though the first trading day might be the first of the month, it could be the third of the month. So that can make this a little bit confusing. Monday's session, this is where we were at right now, but you can see how we have a real tendency to be down on the last day of the trading month. Doesn't mean that we're going to do that. It just means historically that has been what has happened. Then this is looking at the chart where it tends to start off okay for the first couple of days, and then we see some weakness and we kind of bounce around. And then in about the middle of the month is when March starts to show some improvement. And this is a chart showing this area here, which is where we're at currently. That's the purple line. And then looking at the pre-election after midterm bear, that's the green line. And that's what we're trying to follow right now to see if historical patterns will still fit into what's happening currently. Then this takes the 4-year presidential cycle, and we're coming into what they call the sweet spot. Back where the midterms were held, that's when we saw some weakness going down, saw a little bit of a bounce, and now that those things are behind us, we're starting to come into what could be a well-performing time in the market based on the 4-year presidential cycle. What are our scenarios for Tuesday? Hard to go with the down one, even though we are negative. We continue to be oversold, and so we may continue to get some kind of a bounce from that. But our ADX is below 20 and declining with the green line on top now, so it makes this scenario difficult to embrace. Hard to go with the up one too, because our technicals are still negative, and if we're getting a bounce right now, it just looks like a short-term oversold bounce. We're still holding at some support levels with the 250 period moving averages. So we're still going with the sideways one, even though the ADX is positive, it is below 20 and continues to weaken. So our conclusion, the S&P is negative. It's trying to work off this short-term oversold condition. Short-term still negative and mostly oversold. Intermediate term, just a few indicators that are oversold. Long-term, we still remain positive as long as we're above the 200-day simple moving average and the recent golden cross that we saw. Thank you. I hope you have a really good day on Tuesday. I want to welcome any new subscribers. I picked up a few over the weekend, so I'm glad that you're here. I hope that you find some value in the videos that are posted, and I will talk to you in the next video.